Hi, this is Larry Shover, CIO of SFG Alternatives with your February 2014 Managed Futures Update. February was encouraging, given the fact that diversifying managers seemed to win the day for most managed futures programs. We had some huge divergences in the market, especially with FX and metals, and we saw diversifying and short-term directional managers take a lot of advantage of the opportunity. Let's break it down, starting with commodities. We saw some very strong gains in agricultural and energy, offset quite a bit by the metals. However, the asset class seemed to be positive on the month. Short-term directional traders and unique diversifiers seem to be the best to capture the trends in the commodity sector. Moving on to FX saw a lot of whipsaw, a lot of key reversals, especially in the euro and the cable. That hurt a lot of managers. However, two things helped. One was we had long-term trend following, which seemed to do very, very well in the fund and also in the space altogether. Also, managers tended to pick up a good trend in the Australian dollar rebound that we saw in February. Moving on to equities, equity markets, a little bit of divergence there. We saw an enormous rebound in the U.S. and Europe with a fall off in Japan. That tended to help managers quite a bit with that divergent strategies. We saw short-term, long-term, and unique diversifiers all do pretty well in the equity sector in February. Lastly, with rates. There's a divergence in monetary policy across the world. However, it was controlled. It seemed like we saw very good performance from short-term and long-term trend followers. Unique diversifiers did not fare so well. Well, that's your February 2014 Managed Futures Commentary. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.